Welcome to Free Advice Guy. I'm Luke Halter, Free Advice Guy. Today we're going to discuss different financial topics. We're going to comb through personal finance and answer those questions live on stream. And then, welcome to Free Advice Guy. Whoa. I'm Luke Halter, Free. And then we'll go over anything else that comes up in the day, market data like usual, and all that. What's up, Maniac? Wait a second, are these messages from today here? Alright, it's nice knowing you don't have a payment. That's not paid a medical bill. Log into Reddit and post a financial question. Dear advice, folks, I have 20 bucks and I'm tired of being poor. I am too old to work, blind in one eye, have a peg leg, and no short-term memory. Miles, too old to work. WTO, getting crushed today. CDs might also be a good option. Let the young man see shortish-term gains so he more inspired to invest. Somehow I did not see Blind's messages. Sabrina lost all her channel points. Alright, since you guys lost, it's time for me to go in. Let's go. I lost all my channel points. Well, that's a rough way to start the day. Alright, let's get in here. Let's start sharing the screen. We'll get to personal finance in a second. Just chilling at work. I dig it. Muskan, we're doing good. Wife's doing good. Baby girl's doing good. Boy's doing good. Life is beautiful. I have absolutely nothing to complain about. Mike lost the channel points. Man, that's 4 losses in a row. This game is rigged. Absolutely blessed, Muskan. Absolutely. All right, K-Bird, doubling those channel points. First win of the day. Now we can start. Now that we got a winner, we can start. So looking at the markets, we are red here in the U.S. Down almost 1% for the Dow. NASDAQ down over 2. S&P down over 1.5. Man, gold is down. Oil is down. Gas prices better come down. Hey, this is the first day in like 2 weeks that Berkshire Class B has not been... Oh, nope, I'm sorry. Hey, we'll get there. Hold on. All right, so let's look at these crazy gains today. So Wheeler Real Estate investments or whatever they are. 114% today. 35, 24, 26, 23. Let's see what our biggest losers are. Oh man. We only see this in the US. We only see this in the US. Wow, why is Tesla down so much? Was it because of the stuff yesterday? All right, so again, this is the first day Berkshire Class B has not been on the 52-week high in like 2 weeks. That's crazy. People who were shorting Tesla today having a good day, especially if they were leveraged. It's always scary to be leveraged, but you can make a decent amount of money there. All right, let's take a look at the European markets. They were down as well. Ooh, they actually had somebody in double-digit gains today. Very interesting. Let's look at their decliners. Ooh, these are actually big for the European market. They normally stay a lot more muted than we do. All right, let's check the Asian markets. Going to happy hour with one of my buddies today. Today will be a slightly shorter stream, 3.5 hours or so. All right. TSMC was their biggest gainer today at 1.77%. Decliners. Less than 4%. All right, check out the cryptocurrencies. Whoo! Bitcoin down almost 4%. Ethereum down over 5%. That's wild. Right. Take a look at some news headlines. I'm assuming they're going to say that market's down, jobs tightening, so they need to lower interest rates. Let's see what we got here. U.S. economy adds fewer jobs than expected. This is the one I really care about first. Man, Nvidia is down almost 5% today. U.S. economy may be on thinner ice than investors think. Man, getting hit with all kinds of stuff today. All right, we're going to take a look at this jobs report here. Be right back. Unemployment rate falls to 4.2. Labor market adds 142,000. After they announced not that long ago that they revised previous reports down by like close to 1 million jobs. Does anybody actually trust these reports anymore, or do we assume they are less than what they're saying? Yeah, see, they even saying it right here. Revisions, they actually added 86,000 fewer jobs than initially reported in these months. That's crazy. Blind, that's how I feel. Dude, 1 million, they overreported by 1 million and took a year to correct. That's insane. Also, so jobs numbers went down, or they revised it down. They had less, yet unemployment went down. Make it make sense. Ah, they give bad numbers. They can drop rates by 0.5%, 50 basis points. And added that the central bank does not seek or welcome further cooling in the labor market conditions. Wow. The August data marked the fifth straight month payroll additions had slowed from the month prior. Meanwhile, data out Wednesday showed July ended with the lowest amount of job openings in the U.S. labor market since January of 2021. So they might stick with 25 bips. All right, let's read the comments just for fun. Welcome to Yahoo Comments. Man, they're going straight at it. They would cut rates to help Kamala, obviously. Can we believe these numbers? Man, they're hitting it. The real question is whether or not you can believe the numbers they report. Whoo! Commenters on fire. I just don't understand. 25 bips? Don't get me wrong, any cut is nice, but how does that overall affect the labor market and other markets? Wiznerd on a 7 streak plus 450. That's what I'm talking about, baby. All right, that one's kind of boring. I think it's pretty well established that the jobs, inflation, and unemployment numbers are all fantasy from these folks. It does appear to be off. All right. And for anybody who cares about my socials and posting clips, I will be getting back to that very shortly. I hired somebody to make clips for me, 30 of them. I have another person who's making some from a previous job that didn't come through. We reallocated, and I'm going to be making my own soon as well. So we will see how this goes. But I'm hoping to have a bunch of clips in the near future. U.S. stocks erased earlier gains on Friday as investors digested crucial jobs report. So what? It'll be September, and then October, November. Do they meet monthly? All right, cut that. All right, let's get into some personal finance stuff. Bashing tax credit from the Inflation Reduction Act, but we're not talking about how nobody can afford an EV right now. Yeah, that's true. He's taking taxes from the less stable homes and giving it to the more stable homes. It's a really good point. That does seem like a tax cut for the wealthy. They're trying to drive behaviors, so they give a incentive for it. This is a controversial opinion, but I think one of the only tax breaks that should be given are to people having children. Actually, I don't think taxes should be a thing. Let me start that over. We should have significantly less taxes in this country, and people who are getting a break should be the people creating future generations. I think my friend is getting me into a pyramid scheme. All right. Sort by new. Let's go. Let's see here. I have 7,000. I haven't been contributing to this account. I kind of forgot about it. I've been staying with a friend and I've overstayed my welcome. It's been hard to save, and finding out I have this amount will kickstart my starting over. By starting over, I mean my livinghood and retirement. I want to withdraw, but I want to hear other perspectives on if I should. Well, that's a little bit too much to get into there. You generally want to avoid selling your long-term investments if possible. If you have other funds, you should use those. It always gets me, the job revisions they make and how far back they go with these. Like, seriously, let's close the books on some of these previous months. Agreed. Well, K-Bird, I think you saw a few months ago, they revised a whole year's worth down by almost 1 million jobs. It's kind of crazy. I think it was like 800 something thousand jobs. My wife and I always made too much money to claim child tax credit, but I'm totally on board with increasing the credit, widening the range of those eligible. Yeah, I can see that. I'm kind of okay with everybody having kids, regardless of how much they make, getting some sort of benefit for it. We need people to have kids, regardless of how wealthy they are. But if you wanted to cut it off at, say, you can't make your AGI can't be over X to get this credit because you don't really need it, okay. But still, I think it should be for everybody having children gets it. Invest versus spend versus something else. Let's see what this is up to. I'm 40 years old, married, both fairly high earners, and have worked over the last 20 years to be debt free. Nice. I paid off the mortgage. House is inexpensive, but live in the Midwest, so it's cheapish. Car loans and student debt are all cleared. I max out my 401k each year to the IRS limit. Invest in stocks, funds, and have a healthy balance in savings. Net worth is decent. Bills are relatively low. I like what I'm hearing. But childcare is expensive and have another child on the way. Nice. I'm trying to get my 401k pot to about 11 times my salary by retirement. Currently, I am roughly on track, so may end up short, but that's probably okay overall. Anyone else in a similar situation trying to decide between continuing to keep investing versus spend or do something else? Other than carrying on investing, I'm not sure what else. I am also a realist that life is short sometimes, but also want to ensure my family is set up for the future. Interested to hear your views on my situation. Well, investing in the 401k will have additional tax benefits than just building wealth. You lower your taxable income in the current year, assuming a traditional contribution. The other thing is you don't know what's going to happen. Everybody has these targets in the future and think, all right, I'm going to stop now, but I hate hardline stops. It should be a gradual stop. What do you mean, Midnight? For tax credits? It never hurts to save too much money unless you are hurting your current life. If you're not enjoying your life right now so that you can have an awesome retirement, is that really worth it? You don't spend most of your life in retirement. You spend it leading up to retirement. So you need to enjoy that part of your life as well. Just make sure your retirement is covered so you can continue your lifestyle when you actually reach retirement. I'd like to name my friend as a beneficiary on my investment account as well as my Roth. No, not just tax credits, but everything. Like having a hard, if you earn X, you no longer qualify. Yeah, I agree. I think tax credits should either be available or not, actually. I don't even really think there should be a scale to it. I think if you want to encourage behaviors, you should encourage behaviors. You make $9 million a year and you have babies, yeah, here's your tax credit. Like it shouldn't change it. You're still trying to drive the behavior. We need people to have babies. How do people buy a home for 110,000? Where are these places? It's quite an expensive mortgage for such a low balance. Oh, with insurance included, okay. Should we refinance to pay off debt? All right. Should you refinance to pay off your debt? If you can refinance your debt at a lower rate and pay less overall dollars towards interest every month, you should at least consider it. The more interest per month you're paying, the more money wasted. So try and get your interest down, your actual dollars being paid towards interest down. And if that means you need to refinance, at least look into the option and see if it puts you in a better place financially afterwards. It's crazy because I think it was a little over 100 years ago, 80% or thereabouts of a family's income was spent on food. Now we spend something like 5 to 10% on food, like 80% on shelter. Yeah, well, this gets to a bigger issue, Midnight. These are going to be controversial things, and I'm okay with that. Hopefully, I don't go viral for these things. But number one, foreigners should not be able to buy property in America. Our real estate market is international, and it used to be pretty concentrated in like Chicago, New York, and California, but now it's everywhere. People who are not American citizens buying land, buying property, making it expensive for everyone else. You increase the demand, so you increase the price. So that's number one. Number two, I don't really care what side of the fence you are on this. This is just sort of a factual matter, but we have people in this country who are not legal. And depending on the number, you hear as low as 11. I think it's probably closer to 35, 40 million people here are not legally here. They're living somewhere. They are eating up supply, which drives prices higher. So that certainly doesn't help. And then there's actually a bunch of regulations to creating new housing. A lot of the expenses in a house, especially new builds, come from regulations, and it's ridiculous. We need to cut that as much as possible. All right, got an ad. I will wait. Yeah, I hear that there's definitely an argument to be made there. I just think we're one of the few countries where foreigners can buy property and land here, and that's tough. Um, like other places will let you sign, I forgot what they're called, but essentially like 99-year leases, things like that. If only American citizens could buy property, you might be right that the wealthy in America might get more wealthy because they're able to buy up more stuff, but it should increase the uh, what word am I looking for here? Affordability for all American citizens. But like right now, and it trickles everywhere. But if you want to buy a house in LA, you're not just competing against other California residents or people who want to move to California. You're competing against people all over the world, and that drives a bidding war, and that's really difficult. Hey, Midnight, I don't know where I was. I'd be happy to repeat what I said, but you got an ad right as I was saying it. Give me one sec. I need to go wash my hands. You mean not just in America midnight? Dude, I bought a pack of like 40 microfiber towels from Costco years back. I literally have like 6 left, and I don't know where any of them are. I don't know where they went or how they disappeared, but it's not cool. Not cool. All right, let's look at the pro rata implications. Yeah, she doesn't have enough to look at pro rata stuff. This one's not much juice. I heard that a lot of the reason the wealthy of China purchase abroad is because of the hold that the Chinese government has on their currency. So they come to the States or Canada to protect their wealth in those homes. Yeah, that makes sense. I just don't think we should be a landing point for that around the world. Housing is too expensive for everyone here in America. We need to do what we can to lower the housing costs for everyone here. I'm all for helping everyone in the US, and then if we have extra, we help other people. But the fact that we send billions of dollars to foreign countries while we have homeless people here makes no sense to me. I think any country that allows foreigners to own property is making a mistake. I get why they're doing it. They want their markets to go up and they want the dollars to come through. But in the long run, it's not good for your people to allow foreigners to buy land and buy property. All it helps are the wealthy people who already own properties because their values go up. Should I prioritize maxing out my Roth IRA over my taxable brokerage account? All right, 18. I'm an 18-year-old currently building my financial foundation. Get some advice. Working part-time, earn around 16 to 1800 a month at 18 years old. Nice. All my major expenses covered by my parents. That's nice. I invest 140 weekly into my Roth IRA with the current allocation. Total market, some international, and bond. Yo, that's crazy. He's got a 90-10. I also invest $60 weekly into taxable brokerage account. 100% stock in that account. And he contributes $6.25 weekly into Bitcoin. Emergency fund. I have a small emergency fund, but my major expenses are covered by my parents, so I feel comfortable with it at the moment. Plan to save for a home once I start my full-time career. I'm wondering if I should prioritize maxing out my Roth IRA over my taxable brokerage account. Specifically, I'm considering putting $200 weekly into my Roth IRA until I hit the annual contribution limit and then switching any extra contributions to my taxable brokerage account. Right now, I'm splitting my contributions between both. Would prioritizing the Roth IRA make more sense given the tax advantages, or is there a benefit to continuing the split between the Roth and the taxable account? I mean, they're maxing their Roth IRA either way. The timing can make a difference. The earlier you get the money in there, the more time it has to compound and grow, so there is some benefit. But if you're maxing it every year, that's the most important part. That seems unnecessary if I am not worried about losing my job. My thoughts are that it would be more beneficial to get the money working for me in a retirement plan or traditional brokerage. Am I overlooking any reason why I should follow that rule? Or would it be okay to lessen the amount I save in an emergency fund due to the job security? Are you asking me how I would do it? If you can, on January 1st, you make the maximum contribution. Otherwise, you can make periodic payments every month, every week, however you want, until you max it out. Um, there are different ways. Hey, Cheyenne, thanks for the follow. I appreciate it. As for an emergency fund, I recommend that you have around 12 months of basic living expenses in an emergency fund. When you have what you consider very good job security, that's a really good feeling. And you might want to lower the amount that you have in an emergency fund. But the fact of the matter is, you have no idea what's going to happen with your company, with the economy, with your health, with your life. And more emergency fund is going to give you peace of mind. It might feel like a waste if you never use it, but you will always have peace of mind. And if it ever gets to the point that you need an emergency fund and you don't have enough, that could be one of the biggest stressors in your lifetime. So if I opened a Roth IRA in Robinhood, which I would manage, where would you put the funds? Well, I'm going to assume retirement midnight. So, is it safe to assume you still have 30 plus years until retirement, or give me a little bit more on your age? Because the one of the first things we need to establish is a time horizon on this retirement goal. I want to retire in 10 years. All right. Hey, that's good either way. Just needed to set that up. We'll get to this in a second. All right, I'm going to go over risk tolerance with you for a moment. You're going to give me a 1 through 5 scale, or a 1 through 5 number, but let me clarify them. So, a 1 meaning you're willing to miss out on the majority of returns because you can't stomach market volatility. Or a 5, you are very comfortable with the wild swings in the market because you want the extra performance in your portfolio. Came in at 3. I just want to confirm. Yo, BG Blind Leader. Thanks for the follow. I appreciate you. So I'm going to assume a 3, just to confirm. So you have 10 years. What generally, what most financial advisors are going to recommend is starting out an allocation. So if you were brand new, like you still had 40 years to retirement, they'd likely recommend something like at a 3, probably 90% stock, 10% bonds. And then every 5 years or so, you begin to shift a little bit out of stocks and into bonds. So 85-15, 80-20, 75-25, things like that. So if you got 10 years and you consider yourself, that'd be moderate, you might be looking at a 60% stock, 40% bond portfolio. That will expose you to a lot of growth. You'll still get somewhere between 85 and 90% of the overall growth within your portfolio, but you'll be mitigating about 40 to 50% of the volatility. But what you really need to come to terms with is how you feel when markets crash, right? Like remember COVID, markets lost 20% rapidly. In 0809, they lost like 40% rapidly. Would you be able to hold tight and not sell during those periods of time? If not, one, you need to. You need to not sell and make bad moves during those times by selling out when they drop. But a 60-40 portfolio gives you a lot of benefits and mitigates a lot of the downside. Oh yeah, I remember those times as well. So if you were in a 60% stock, 40% bond portfolio, the first basic principle is diversification. And the easiest way to do that would be index funds. So a total stock market index, a total international stock market index, a total bond index, and a total international bond market index. You could own 4 funds and own the entire world's market for very cheap. Aren't those the times where you just average down anyways? When you say average down, I'm not sure what you mean, but during those downturns, I would try to throw quarters I found in the couch at the market when markets go down. But we're going to get there too, but when the markets go down, the reason you want to set allocation is because of how you respond during those times. So if you have a 60% stock, 40% bond portfolio and the stock market loses 50%, so 60% of your portfolio becomes 30% of your portfolio and your bonds go up. You're then going to move bonds into the stock market. So if and when the market recovers, you've not only recouped everything you've lost, you're actually ahead because you bought shares of stock while they were lower. That's called rebalancing. So if you set your target allocation and make moves based on what the market does, and you don't generally want to do them too soon, because if you are buying the dip too soon, the market could go down more and you compound that loss. But either way, you buy the dip, and then through subsequent recoveries, you are ahead because you bought shares of stock while they were lower. But this is where your risk tolerance comes in, because even though we can be talking about this and you can agree to that, when markets drop, you have a ton of advised clients who market tanks and they go, all right, I'm out. And you're like, no, you're going to lock in these losses. So like, don't care, I'm out. And then the market recovers and they never make that money back. Figure I'd help on Twitch. Yo, I appreciate it, Blind. Twitch is kind of weird. The more people that watch means more people will watch. There's like these weird psychological things to it. If they see you're streaming to 1 viewer, people don't want to stay. But if you're streaming to 10 viewers, they stay. 20 viewers, they stay. Things like that. So I really appreciate that, Blind. Does that all make sense, Midnight? Well, a market crash would take the bonds, sell those, and buy more SPY. Yeah, so QQQ is a dividend producing fund. I actually, and SPY is only 500 companies. You're missing mid and small cap when you own SPY. And I imagine QQQ has a lot of overlap with SPY because the larger companies are the ones paying dividends. So, yeah, I would look at like if you're going to do SPY, you want to look at mid cap and small cap indexes as well. And you want to look at how you're allocated to each of those, because if you are improperly weighted, you're taking more risk on that part of the market. And maybe you want to do that, but if you don't want to do that, then you need to be careful. Yeah, I've done the single stock trading game and lost, so ETFs are a long-term solution. I feel that. Check this out. WTO. This is the single security that I own. I did this for a reason. A month ago, this was like $2 a share, and it dropped down to like 8 cents. It lost 96% of its value. So there's a viewer in here who was buying WTO. So I wanted to get in just to go through the experience of owning an individual security. Again, this is the only individual security I own, and I'm not recommending it because I bought it at 8.1 cents. So I've already lost a good almost 25% of the value that I put in there. So your ETF question though is a good one. So if you have to figure out if you want to, if you're comfortable with market gains or if you want to try to beat the market. Trying to beat the market is very difficult, very difficult. Almost nobody can do it on a consistent basis, especially the longer time period you go in. So that's where I go with index funds. So like the total stock market index fund is the S&P, mid cap and small cap. Yeah. The 500 index fund, I believe historically has averaged a little over 8%, and the total stock market has averaged over 10% through long-term history. Lately, SPY has, or the 500 index fund has outperformed the total stock market. But I think that's mostly due to FANG or whatever, the Magnificent Seven. We're in a weird time right now with stocks where 7 companies can sort of carry an entire market. Carrying me down. Losing me money. What happened, K-Day? What happened? So midnight, the crashes are almost impossible to time or know when they're going to happen. Timing the market is extremely difficult. There are charts here. Let's see here. Timing the market charts. That even if you only bought during highs, it's like impossible. So there's things like this. You get a lot of investing returns happen really quick in very specific times. So if you happen to not be invested during these times, you miss it. So I've pretty much figured out that I'm not smart enough to figure out the market. You never know what it's going to do and when it's going to do it. But I believe in the long run, it's going to be up. 30 years from now, we're going to be higher than where we are now. And that's really what I care about. Day to day, I don't care about it too much. But I know if I try to be smart and buy things when I think they're good buys, I might miss out on things. So, K-Day, I was thinking about you. Because where is, let's do this. Tesla's down almost 7%. That's down more than the overall market. And this is where individual security, same with Nvidia. Nvidia's been absolutely demolished, down over 4% today. Wow, it's almost down to $100 a share. It's very true, K-Day. Well, the what was that? They got sued or something like that yesterday or 2 days ago by the Department of Justice. So, yeah, the Tesla's down, Nvidia's down. This is where, right, these two stocks down almost 7%, down over 4%. But if you look at S&P 500, it's down less than 2%, or the Nasdaq's down less than 3%. This is where the owning broad market comes into play. When you own individual securities, it's possible that you're going to make more than owning an index. There's no doubt about it, or even a sector fund. There's no doubt about it that you can make more money if you own individual securities, but you're taking on significantly more risk because of things like this. Did anybody expect Tesla and Nvidia to crash the way they've crashed lately? No. Um, Everybody thought, man, I'm just going to get rich off of these stocks. But in reality, you never know what's going to happen. The, the market can be brutal. I took a couple of dollars loss on Tesla when I sold. If I sold yesterday, I would have gained. If I sold today, I would have lost again. Wow. It's crazy. You got to think about what your long-term perspectives are. If you think Tesla is going to be up or anything's going to be up 10 years from now, what happens today doesn't matter. Do you think that's going to... I think the phone is already priced into their shares. I actually don't know that question. That's a good question. Does Apple stock go up or down after announcements? Let's look at dividend.com and see. Yikes, this was back in 2018. That's not recent. That's too much. Let's figure something else out. 2019. Nvidia stopped its fall less than $1 from my bid. I have a bid sitting there for 5 more shares. This is not a recommendation to buy anything, but if I were to ever be looking at buying Nvidia, around now would be that time. This drop is crazy. In the game we played, whatever that was last week, I think, or the week before, where they put out a good earnings report, they beat on revenue, but I think they lowered their expectations for the next quarter and just down. And then the DOJ sues them, down. It is so difficult to predict stocks. 108, or I guess 109. That's not a terrible price to own, K-Day, but I think it's below that right now, right? Yeah. 102. So you're down like 5% or so. Maybe a little bit more than that. Nvidia's $400 billion tumble. 400 billion tumble this week makes Bitcoin look calm. Oh man, you got in early, blind. Yeah, stock splits and reverses are tough. But you still hold the same value midnight. It just changes things. Some people like owning a lot of shares, but you always just have to multiply your shares by their price to get your value. And if you do that, it doesn't change, but some people like owning a lot of shares. Some people like things with high share price. K-Day, an app. People have talked about an app on here. What I'd actually recommend is the free advice guide, Personal Monthly Budget. But there are apps that can do it for you as well. I like this because it puts everything in front of you all at once. You can look at all of your expenses at one time very easily, very succinctly. But I don't know, or I have not used an app myself. I've always tracked my own budget. Wait, a month ago? Nvidia was down at 92 a month ago? That's wild to me. I thought it's... It had to be more than a month ago. Unless you bought like right here. On August 5th? Is that when you did it? Looking at NVIDIA on my Webull app, and it's riding under the MA EMA 200. I'll be honest, Midnight, I am not sure what that is. Okay. Yeah, August 5th is one of those days. Black Monday, as they were calling it. Things were down, but not crazy. Hold on, let's do this. Let's look at the S&P. Let's go to 3-month chart. See, even with the recent downs, if you bought on August 5th, you're up by like 8% right now. What did Tesla do on August 5th? Not nearly as much. But if you bought Tesla on August 5th, or somehow you knew August, 7th, you'd be up. The chart moving averages, all right. In my opinion, the wiser bet is generally index funds, and if that's too broad for you, it would be sector funds. Let's see here. View all Vanguard mutual funds. No. All right, so checking out stuff like this. So communications. Where's the tech ones here? Information technology. So is year to date this one? Yeah. So year to date, information technology is up over 13%. Right? I don't know what Tesla is up year to date or Nvidia, but I do wonder where they are in comparison to the overall index or sector index. Think you guys just had an ad. Ad is over. But what I was saying here is for me, it's always better to diversify than to own an individual security. You do give up some potential upside opportunity, but you limit the downside. So the information technology ETF or mutual fund is up over 13% so far this year. Probably going down after today, but like this is what it's done over the 1, 3, 5 year period since inception, all that sort of stuff. Like, or would you not be satisfied with this? Yeah, VGT. VGT is the ETF version of it. So if you were going to go into a specific sector, do you want to take the additional risk of picking one stock in that sector? Or do you think that that sector as a whole will perform well enough that you'll be satisfied? Ooh, tell me, Midnight, what do you think? What's going to cause the issue? Because I hear you and I've heard that, but technology is always going to be present. You know what I mean? Did my family just get home? Give me one sec. They did not. I am hearing things. It's definitely possible, Blind. AI seems to be the future. And tech will be leading that. I'm assuming VC is venture capital, but there's already something there. I think there's apps like Cash App, or there's other technology, but not bank apps. Yeah, but technology is all sorts of things, right? I think Tesla's considered a tech company, right? And if it's not Nvidia, it'll be some other tech company, right? That's going to come up in AI. There's just technology is always progressing. We're becoming more and more technology dependent. So with that, it's hard to see prices going down. Not that they can't, but I think more money is going to flood into tech companies in the long run. But I think we looked at this before. Just to sector historical performance. Here we go. Check this out. Man, my internet is slow. Actually, this chart isn't as fun. Let's do this one. Boom. So these are the different sectors. Information technology has been the top performing one 6 out of the last 15 years. No, 5 out of the last 15 years. But this is where it's been all throughout the year. It's always cyclical. But look at these returns. What? It had 57% in 2023? Look at these numbers. That's crazy. Energy has been the top performing and the bottom performing. Same with health. So this chart illustrates the reason why I believe in the total stock market investment return. Yo, what's up, Acer? I'm just looking at it like, say, graphics cards and processors. We hit a point where growth is no longer logarithmic. That may be true, but when? It might not be true, but it might be. And if so, when? And then, even if that is the case, there will be some other technology, right? Apple, Google will come up with something. Quantum computing comes, who knows when that'll be, you know? Are you guys hoping for BNRG to go under $1? No. So it's more about, right, there's always going to be the next technology. And once something has run its course, right? Like if you think about it, Apple, when was the last time Apple innovated? Right? They're adding AI into their phone, like, okay. But when was the last time they actually innovated? Since the iPod, the touch iPod that they added phone abilities to and made the iPhone, right? Yet they're still driving forward and have driven forward since then. Apple is sitting on cash. That is true. The question is why? Why does Apple have so much cash? I like re-risk blind. As is Warren Buffett. Yep. Is it because they're looking to make acquisitions? When some other company dies, Apple or Warren Buffett buy it, do something with it, and help it rise like a phoenix from the ashes? Who knows? All right, these guys talking about BNRG. Let's pull it up. Down 12%. Wait, it did break $1. Oh, you mean above $1? It's been trying to go above $1. Need cash because the market is going to go belly up. Possible. And then what? Did they buy back their own shares? They buy back their own stock, wait for it to go up in price, and re-release it to the market? Who knows? Look at this. Acer's got me telling me to put the rest of my life savings into Bren Miller Energy. I think so, Midnight. I think they did buy back stock. But companies holding cash or people holding cash are generally doing so for a reason. It is a little bit interesting. I get why Warren Buffett, the investor, would hold cash because he wants to acquire something else or buy more stuff. That's what he does. He buys companies and lets them keep running. Oh man, Blind lost 77 points. But Apple holding cash feels interesting. You think BNRG might hit 60 cents? If it does that, Acer, I'll take a look at it again. Yes, they have, Midnight. They've had cash for a long time. That seems to be a strategic decision they've made and have done it for quite some time. Apple cash on hand. Whoops. Whew. Apple cash on hand for the third quarter, for the quarter ending June 30th, was almost $62 billion. Wow. If they were their own bank, that'd be crazy. Would $61 billion be enough? Probably. Acer's deep into those numbers. Deep into those numbers. That would be interesting, Midnight. Getting into bank stuff is there's a lot of laws and regulations into it, and a lot of people don't find it worth it. I have no inside information here, but Vanguard, they considered being a bank at some point, but just felt it wasn't worth it for different reasons. I don't know the specific reasons. I won't pretend to, but I know laws and regulations played a factor into that. And then how much could they actually disrupt the banking market doing what they were doing? All right, so we already covered emergency fund. Man, this person is 22, making 80,000 a year pre-bonus work in finance. I have very few expenses and want to gain insight. Allocate 1,200 for rent, utilities, 1,300 for food, car insurance, fun, and other. Checking out 3,000 in the savings account. For anybody starting their financial journey, there are 5 steps you need to consider to reach financial freedom. Number 1, you need a detailed and specific budget so you know where every dollar is going. From there, you need an emergency fund to cover your basic living expenses should you lose a job or another emergency pops up. I like 12 months of basic living expenses, but you could be more or less conservative than that. From there, you need to set goals for your money. With time horizons and risk tolerances so you know how to properly invest those. Once you have your specific goals set out, you can then begin to invest and save towards those goals. And then, especially like this person who's young, your life is going to change. Your life at 22 will be different at 32, at 42, at 52, and you need to navigate those changes and update your financial plan accordingly. With the acquisitions abound in today's market, who knows where we will be in 5 years? Very true, Midnight. It's very true. I just learned recently that there are quite a few blank check companies that all they do is look for acquisitions. It's kind of wild. This person has no small cap. This post was deleted. Okay. Do you see a return of the FTC and them going after monopolies? This is a philosophical question, Midnight. They should go after monopolies, but what do they consider a monopoly and why would they go after that specific monopoly? We've had monopolies for a long time and nothing's happened. Unfortunately, I think a lot of that comes down to politics. Do you want to go after a company, right, like Google or Alphabet, whatever they call themselves for a search engine, had a somewhat of a monopoly, made it difficult for other people, but nothing happened. So, I'll say yes, but softly, because it'll depend on the politics of it all. I've been working since I was 16 and try to keep my expenses low. Nice. I wanted to eventually buy a property, but I think that goal might be further away. I live in SoCal and can't really afford a property. Don't know if I'm better off investing more rather than stockpiling at a high yield. Income before taxes 115, 85 in a high yield savings, 19 as emergency fund, investments, debt. 30K in graduate student loan debt. I was paying $1,200 a year in interest towards that. When it comes to investing more or stockpiling cash, it really depends on the goal for your money. If you know you're going to need a sizable down payment for a house, you need to stockpile cash. If you already have your house or you just think you're going to rent forever, then you can start stockpiling more towards investments. But what you do with your money is really dependent on the goal and what you're going to do with that money at what time. At a 296, that's my limit though. If we get no further, I break my exposure rules. Oh man, all right. So Blind, you got some rules that you stick to. Going to invest in S&P or they give you dividends. It's where they're investing in another dividend fund. All right, so you already own the total stock market, and now you're thinking about adding another position into dividend funds. What you're doing there is actually changing the concentration of your portfolio, adding concentration risk to those dividend paying stocks. So you are one thinking that even if you don't mean to, you're thinking that they're going to outperform the overall stock market. Another issue that you might be getting into is those dividends, if held, those dividend stocks held in a taxable account are going to increase your taxable income every year, which means you're going to owe more taxes every year. But if you already own the total stock market, unless you feel a need to own more dividends or income producing securities, there's not really a need for it. Ooh, hit me with more, Midnight. I like talking about REITs. What do you mean? I know nothing about them, only what The Big Short has taught me. Yeah, you want to understand if you're going to look at buying a REIT, you want to understand the company or companies inside of it. So, right, there's REIT index funds that you can get through companies or REIT funds that own multiple companies that own real estate. But it's your way to own real estate through a third party. So you don't have to worry about the management, upkeep, and repair. So if you believe the real estate market is going to go up, it's just like any other stock. If you think they're going to go up, the value will go up with it. If you think values are going to go down, or we're going to run into another housing type crash, then those funds will crash as well. So it's just another sector of the market that you can get into. but they generally own baskets of houses. Uh, a lot of them are being rented out so they can produce income for the funds themselves. And then there's also capital appreciation. Ooh, midnight. Maybe we listen to the same things. Commercial is in trouble. They are running into, I forgot what they call it, but like every 5 years they have to reassess the debt, and valuations have gone down spectacularly in commercial real estate as more people are working at home. I think that's why corporations are starting to push people back into the office, because they don't want the values of those buildings to go down. Um, Single family, something can always happen, but the difference between today and what happened in 0809 is, one, the quality of mortgages is higher now. There were a lot more rules put in place. And then number two, there's a lot of people who own homes with low interest rates. They're not walking away. Even if the housing market crashed, they're not walking away. There was a psychological thing that happened during the last crash where people became upside down, and for some reason that made them walk away even when they could afford the payment. I don't think we're going to see that the same now. If there was a housing crash tomorrow, I don't think people are walking away because their interest rates are so low and they can't rent something for less than what their mortgage already is. Price between 50 cents and 20 bucks. No trading unless current price is interacting. Ticker must have 4x relative daily volume. Never risk more than 10% of my account value in any single name. 1 million shares minimum. Okay. Yeah. I like that you got some rules there, Blind. How did you decide on 10% on a single security? That feels like a lot of concentration risk to me. Yeah. We midnight. We lived in Texas up until 2 months ago, less than 2 months ago, actually. Um, we love Texas. We actually did not want to leave. We enjoyed our time there. The internet in Texas is spectacular. There's fiber everywhere, but we couldn't afford it. Our rent in Texas was like 2,200 bucks. So we came back to Arizona to lower our costs, to either live with family or live on our, don't be mad at me when I say this, but our $400 mortgage. Mainly day trading makes sense from that aspect. Okay. So is it 10% of your day trading assets or 10% of your overall assets? Midnight, I bought in 2012, which was pretty close to the bottom. Yeah. Well, that's what I hope Stonks and Free Advice Guy turn into, a collaborative community where we're all helping each other. And so far, that's what Stonks seems to be, and I love that about it. All right, now I think my family is here. Let me be right back. All right, sorry about that. My baby girl did not want to let me go. And who am I to say no? All right, so you left your job and you have a 401k left over. What happens to that 401k? A lot of places will let you keep it there if you want to keep the 401k, but a lot of people decide to roll that over into a rollover IRA. Generally, that increases the amount of options you have to invest, and you can invest it however you want. You don't lose it, it doesn't go away, you get to keep it, and you just move it into a traditional, or I'm sorry, a rollover IRA. Still very, very new to trading, so I'm an open book. Oh yeah, let me read your response there. 10% of my day trading assets. Okay, that makes a lot more sense. That makes me feel better. That makes me feel better. You're considering doing a Roth conversion because tax rates are going to be higher in the future. It's definitely possible, but the fact is nobody knows. There's a lot of signals that say tax rates will be higher, 10, 20, 30, 40 years from now, but it really depends on our government and what they do with the debt. So making a move based on assumptions in the future is just guessing. You might be right, but you could be wrong. The best strategy is to have money in all buckets in the future so that you can withdraw at a tax advantageous way depending on what the tax codes are at that time. I only use EMA because it weights recent price action more heavily relative to the time frame. I'm scalping, so the most recent prices are more critical to my entries. Hey, Blind, do you do these trades inside of like IRAs or are you doing them in taxable brokerage accounts? And does that factor into your trading at all? That's funny, Acer. If you own both the total stock market index at 50% and the S&P 500 at 50% of your portfolio, what you're effectively doing is over concentrating your portfolio into the 500 index fund. If the 500 index fund overperforms the rest of the market, that's going to be great for your portfolio. But if it underperforms, it's going to hurt your portfolio. By doubling up on the 500 index fund, which is already inside of the total stock market index, you are over concentrating into the 500 index fund. So it's good if it performs well, it's bad if it performs poorly. We don't know what's going to happen, so you're just taking additional risk by doing something like that. Taxable brokerage, it does not. The long-term holdings are in an IRA, like the NVD and the Ford I'm holding. Separate account altogether. I dig that. Sounds like you got a pretty well thought out plan there, Blind. Where did the rules come from? I paper traded for almost a year before live trading. Started with 1,000, lost down to 300 as I refined my rules and strategy. Now the day trade account is just shy of 6K and the IRA is a little more than 9K after 4-ish months of day trading. Nice. I dig that. Have you compared it to the overall market? Like what your balance started at, where it is now, compared to if you would have just put that into, say, SPY or VTI or something like that? Way beyond that? Hey, sounds like you're winning. Very common, very common. All right, so volume is 893,000 shares. Why is the volume on BNRG so down? If their average volume is close to 5 million, why are they under 1 million? Down cycles and patterns usually have considerable less volume. Interesting. Only learned to set myself a max loss limit for the day. Having that helps avoid being emotionally crushed if I make a mistake. Smart. Emotions are a big part of investing, no doubt about it. No doubt about it. So you have other debts and you're considering a HELOC to take care of those debts. You could definitely consider it if it'll lower your monthly payment and the overall interest that you're paying per month and per year. Um, the one thing you need to worry about with a HELOC is they're generally open. So if you don't have discipline, you can end up taking more money out of the HELOC than you anticipated, actually putting yourself in a worse position. Something like this should only be considered if you are a disciplined spender. Wifey told me to tell you thanks for the heads up on Flip. She saved a nice little chunk on grocery shopping yesterday using it, mostly for the meat purchases. I love it, Blind. That app is a game changer. Happy to help. capital gains are assessed based on the purchase value and the sale value. So if you buy stocks at $10,000 and then you sell them at $10,500, the gain that you'll be taxed on is $500. The difference will be whether you held those shares for under a year or over a year, or whether or not you pay short-term capital gains rates at your ordinary income tax levels or long-term capital gains rates. It's almost always better to hold it for a year and pay long-term capital gains rates. And just so you guys know, I keep doing these specifically because I'm turning them into clips afterwards. I created 11 clips on my Twitch account this morning from a stream 2 days ago by following this method, by looking at questions and answering them. Acer lost all his points. Sounds good, Blind. Enjoy the show. When you're working with a financial advisor, the value that you get from them is dependent on you. A financial advisor doesn't know what topics you want to discuss or things that are important to you unless you tell them. The financial advisor should ask, but you need to figure out what you want to get from your relationship with a financial advisor and then let them know that. It's a partnership. You need to work together to maximize your financial plan and making sure that you're getting the full value out of that relationship. If you're brand new to the world of investing, there are books out there that you can read, videos on YouTube that you can watch, podcasts you can listen to. But what might be better than all of those is talking to somebody live in the moment, like me, Free Advice Guy, to answer all your questions when you have them and when you need the information. I'm here to answer any questions you have about finance, money. I'm here to answer all your questions money related. My goal is to put you in a better spot financially and help set you up for financial freedom in the future. So whatever questions you got, stop by Free Advice Guy and we'll talk through those. I'm not really sure what questions this person has. You're just getting into your financial journey and you're not quite sure what to do. Uh, you always just want to go back to the same 5 steps and reassess as your life changes. Set up a budget, a very detailed budget. Save an emergency fund for 12 months of basic living expenses. You could be more or less conservative on that if you want. Set up established goals for specific dollar amounts and specific things you want to accomplish. Start investing and savings towards those goals and navigate life changes as they happen and update your plan accordingly. If you keep doing this, you'll reach financial success one day. Always live within your means. Sorry, I'm looking for questions here that would be fun to answer. If you're looking at the decision of buying or renting a house, there are many things to consider. What are your overall monthly payments for rent and for your mortgage? But other things you need to factor in is rent, you don't have to take care of maintenance on the house or repairs. Whereas if you own the house, you do. So those costs are going to be higher. Utilities should be about the same with comparable houses. But overall peace of mind is a big part of this. Some people don't want to own. They don't want the responsibility of having to take care of the repairs. Some people don't want to rent because they don't own it and they don't have any sort of equity in the home. If you buy the home, you're going to participate in any sort of value growth within the home, whereas when you rent, that money's just going for a place for you to stay. You need to factor all of this in and make sure you have peace of mind about what decision you make when it comes to renting or buying. Trying to sense how I should be prioritizing. Two kids, ideally want to retire early with the mortgage and daycare costs. We're not quite putting away what we'd like. Medium cost of living. Suggestions? If you're unsure what to do next about your finances, the best thing is to actually start over. Begin step one of the 5-step plan to financial freedom. You got a budget. Put down a very detailed budget and figure out where every single dollar is going and what its purpose is. Can you make any cuts? Are there ways to save money or cut out expenses altogether? From there, reassess your emergency fund. Make sure you got that in place. After that, you need to have clear and specific goals. Once those three steps are taken care of, you can begin investing and saving the way you want to with any extra money you found or reallocated money. And then from there, you're going to need to navigate, going back to step one and going through this process over and over again as your life changes. Your financial plan is something that you don't just set and forget. It's something that you have to continuously look back on and reassess anytime you have a life change, and those generally happen at least once a year. If you're unsure if your asset allocation is the way it should be, you just need to reassess your goal. You need to set your time horizon, risk tolerance, and financial figures that you're reaching for this goal. Your time horizon and risk tolerance are the two most important pieces for your allocation. On a 1 through 5 scale, 1 meaning you're willing to miss out on most of the returns from the stock market because you can't deal with the volatility, and a 5, you are very comfortable with the wild swings in the market. You need to figure out where you land within that so that you can properly allocate your funds. At the end of the day, you need to be allocated in a way that'll give you peace of mind and let you sleep at night. All right, let's try another one of these sites here. Give me one sec. Let's take a little break from that and look at how the markets ended today. So Dow was down over 1%, Nasdaq down 2.5%, and the S&P down over 1.7%. Man, Wheeler Real Estate Investment. Why did they go up so much? That's crazy. All right, this is the first day that I've seen where the Berkshire Class Bs didn't end up with their new 52-week high. All right, it's a pretty rough day in the market today. You want to know the secret to financial freedom? It's actually kind of easy. You need to get your expenses as low as possible. This is where buying a home eventually wins out over renting. If you have a mortgage for 30 years and you pay it off, at the end of it, you no longer have a housing payment. You just have utilities and other expenses. Whereas if you're renting, you're going to have that expense forever. So if you want financial freedom eventually, you just need to get your expenses as low as possible and make sure you have enough saved in investments so that you can draw on those savings to pay for your expenses in retirement. So if your expenses are low enough, you can retire early. But if your expenses are high, you need more of a nest egg, and you may have to retire at a later date. But the best thing you can do for yourself at any point in life is get your expenses as low as possible. Is the $23,000 contribution limit the total amount that you can go into your 401k? No. The $23,000 limit is currently what you as an individual can contribute to your 401k. Your employer has the option to match or put more into your 401k up to a total contribution limit of $69,000. Most employers are never going to give you that or get you anywhere near that, but the $23,000 individual contribution limit is just that, your individual contribution limit. Thanks. If you unexpectedly come into a large sum of money, what should you do next? It's easy for everyone to want to go and buy the things they wanted, get a new car, get new toys, things like that. And some of that's natural, and maybe you should do some of that to enjoy it. But really, what you should do is look at that money and factor it back into your plan. Reassess your budget, reassess your emergency fund, reassess your goals, and use that money to invest and save for you to accomplish those goals. If you end up spending that money unwisely, you'll look back later in your life and wish you had done something different. Be smart about it. Any money that you get, put towards your financial plan. All right, I'm going to use the restroom. Be right back. We are back. We are back. I want to see who won. Meal train post baby. All right, we got results. Dieter. What a savage. Kenny is me. Man, look at that. Dieter making $100 today, bro. Did my boy Acer get any is the question. Stonk Fiesta. Put in a bunch at the same price. Well, they won like $10 doing that, so. Man, Dieter's all over this. Dieter. At least making money on the game. Portfolio crying. All right. Let's take a look here.
In buying in that company because it lowered the price quite a bit. So generally, the stock market just really went down. When we look at the VIX, and VIX is the volatility index to measure of volatility. I'm going to go out a year because I think it gives us a sense of when was the last time there was this much fear in the market. And the last time we had this much fear was looks like we exceed or close to exceeding where we were toward.
All right. I'm going to go ahead and call my stream early today. I am meeting with a friend tonight. So all right, guys, we're gonna go ahead and call that a day. Um, Anybody there? I love you. I'll be back tomorrow. Oh no, I'll be back tomorrow night for a gaming stream. But I love you guys. Have a great night, and we'll talk to you soon. Bye, everybody.